Are you struggling to make money in the stock market? Well, then watch this video because I'm going to show you a simple trading technique that even a beginner can learn that will turn you from a break-even or even a losing trader into a consistently profitable stock market trader. Guys, before I go any further, please hit that like button. It will help push this video to other people that might need this strategy in their lives. So in this video, I'm going to give you a simple trading strategy that can take you from being a losing trader, break-even trader, to being a consistently profitable trader. You know, maybe you're hopping from Discord group to Discord group, from guru to guru, looking for some magical indicator or some magical strategy. Well, I'm going to keep it real. The stock market isn't that hard. It's those traders making the stock market hard. The patterns are the patterns, the setups are the setups. I see a lot of traders with charts with like 40 to 50 indicators on them, over analyzing everything Fibonacci's and all these crazy methods. So in this video, I'm going to give you a simple strategy that even a beginner can use to consistently make profits in the stock market. I traded this strategy today. I made over $2,000 in less than 5 minutes. If you're interested in seeing the profit and loss, go to my shorts and click on the recent video. So let's hop right into this strategy. That way I can teach you guys how to consistently make money in the stock market. Here's the trade I took today, and I'm going to show you how to replicate this exact trade. Now, I made $2,000 on this trade in less than 5 minutes. If you're interested in looking at that profit, then go to my last short. I'm not going to bore you with the B-roll and all that today. I think the value of this video far supersedes retaining your attention. You know, the real traders that want to learn this method will stay tuned and watch this video. One thing you'll notice about this chart is I don't have 40 indicators on here. I don't have Fibonacci Alfredos drawn all over the place. I don't have any of that. You want to know why? Because it's all garbage. Fibonacci, garbage. Bollinger Bands, all that stuff is absolute garbage. It might work for some people, but I found that it doesn't work for me. All I use is volume weighted average price, which is this white line, the 9 and the 20 moving average. That's it. 3 indicators besides volume. That's all I'm using. So what strategy is this? This is called an opening range break, and this is on a 1 minute time frame. Now, this strategy can be traded on any time frame, all right? As long as it's the market open, it could be a 1 minute, a 2 minute, a 3 minute, a 5 minute, 15 minute, 30 minute, 60 minutes. And another cool thing about this strategy is you could trade it with options, you could sell puts, you can sell calls, you could buy calls, you could buy puts, or you can trade it with shares. It's a multi-directional trade, meaning that you can trade it to the upside, you could trade it to the downside. So let's hop into the actual technical setup. So now there's one thing that we must go over before we can go over the actual technical setup, okay? And that's the trade thesis. In order to get a better edge in the market, we must look at a stock from the top down. We have to understand what a stock is going to do on a larger time frame before we can scalp it on a smaller time frame. If we look at the daily chart and we're staring at this day right here on a gap down, it'd be silly to look for opening range breaks to the long side, right? That would be a counter trend trade. So it's very important that we understand what a stock is doing on a long-term time frame. And let's look at Meta and the thesis for taking this trade today. What I'm noticing on Meta is it has no beta to the market, right? The market's just selling off. Meta is consolidating, and Meta is also putting in one of my favorite setups, which is the George W. You can see this right here. And today is the day that I took the trade on Meta. Now, what I've noticed is Meta had a beautiful gap up. There is no support or resistance anywhere around here. And if Meta continues in this George W setup, it will at least go to the neckline. All right. So I know that today is a good day for me to look for long opening range breaks. All right, so the actual technical setup for the opening range break. This gray area noted here is pre-market. Pre-market is very important when you're taking an opening range break because what I look for in pre-market is a nice consolidation. As you can see here, price on Meta is consolidating around volume weighted average price. That's crucial, okay? We don't want anything that's extended up here or extended to the downside, all right? So I want a stock that's going to open close to volume weighted average price. I'm going to watch how the price reacts. Now, here is the first 2 minute candle on Meta. The open and the close is what is called the opening range. Now, it depends on the time frame you're on, whether you're on a 1 minute, 2 minute, 5 minute, whatever candlestick time frame you're on, the first candle is the opening range, all right? And the trade name is the opening range break. So, I mean, Barney style, you can figure out what that means, right? We are going to trade the break of the opening range. And that's exactly what I did on that trade. That's exactly what I do every day. This is my trading methodology. So, as soon as Meta breaks to the upside, we're looking for long positions, right? Because Meta's gapping up and the daily pattern is bullish. So as soon as Meta breaks to the upside of the opening range, we are going to enter the trade. And if you look right right here, entering at 164.17, you got over 2 points. 1,000 shares, 500 shares, 600 shares, 200 shares, 300 shares should make you enough money off 2 points to where you can replace your job's income or have a nice little side hustle, right? And these setups happen every day. Another important thing to note, if you're looking for A+ setups on opening range breaks, above volume weighted average price and a break above the moving averages. So this was an A+ setup for me, and I took it with size and made over 2 grand in less than 5 minutes, right? 2, 4, 5, right? I was out somewhere along here. I was partialing out. A very simple strategy to use. Now I want to show you a couple other examples of this because it happens almost every day, and it's important to find the correct stocks. That means they have to have good catalysts, all right? If we look at yesterday, look at this 5-minute opening range break. Textbook stuff. If you had took it here above volume weighted average price, nice break over the EMAs, you would have had another nice 2-point move. These trading setups happen all the time. Now let's go over the risk to reward on trading these. Your risk to reward on these trades, and this is what I use, okay? It's gonna be different for everybody, but I will use either half of the prior candle, depending on my position size and whether or not it's $1, $2, 50 cents, or I will use the opening range low, okay? Because I know that if it breaks the opening range low, the trade is void at that point and it's probably not gonna work out. Your reward is 2 to 1 or 3 to 1. This is obviously going to be on the fly based off of your position size and your risk size. So it's 50 cents. You're gonna be looking for $1. You're gonna be looking for $1.50. You're gonna be looking for $2 where you're gonna start to partial out and start to take profit. Very simple, guys. You can trade this strategy every single day. This happens every single day in the stock market. Let me know in the comments below if you trade opening range breaks, guys. If you found value in this video, please consider subscribing, smashing that bell notification so that you can stay tuned for future videos, and hit the like button.